We've got a resource directly south, 5 kilometers south of our mill. It's called Aquarius. This thing is wide open. We have intercepts of 600 gram, 200 gram across 2 meters. We've drilled some holes into that. There's no doubt that us putting money back into the ground, reinvesting into ourselves, paying off our debt will really create shareholder value.
Welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up, it'd be much appreciated. And of course, please leave your comments below. Helps us understand the types of questions you'd like us to ask, what you think of what we're doing, and of course, a little bit of feedback on the company itself. And if you haven't already done so, click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Paul Huet. He's the CEO of RNC Minerals, gold producer, TSX listed, but assets in Australia. And he talks us through their quarterly results. What a quarter for them. Despite bushfires, flooding, and COVID-19, it has not affected their guidance. Costs are down. Cash in the bank is up. Lots of optionality. We discuss quite a few things with Paul. Take a look in the description below for some of those. Anything interesting in particular, click on the relevant timestamp. That'll take you to that part of the video. Enjoy what Paul had to say. Paul, how you doing, sir?
Hey, Matt, how are you today?
I'm all good. I'm all good here. Long time. But you have got some fantastic results I see today. Well done. Congratulations. You pleased?
Yeah, look, it's hard not to be pleased when you can deliver results like we have in the current environment. So I'm absolutely thrilled with the team and the results we've had. So it's been an outstanding Q1 for us.
Well, I mean, really, and that's the bit I want to talk about, actually. But why don't you give us the headline numbers for people who haven't perhaps seen the press release yet? We'll put a link to it in the comments section. But I want to talk to you about how you've managed to do it in a second. So why don't you go over the numbers?
Sure. Let me focus on a couple things first, Matt. Obviously, the production. We had guidance out to the market right now, 90 to 95,000 ounces. Q1. Despite the challenges we've had with COVID, and even in January, we had issues with rain and flooding. We managed to achieve just slightly under 25,000 ounces. Look, if you multiply that times 4, we're on a path to do about 100,000 ounces, which is the high end of our guidance. So I'm extremely happy with the results with respect to production. Alongside that, we've managed now 3 consecutive quarters, Matt, to reduce our all-in sustaining costs. We've been very, very focused and disciplined at following our costs. We've always targeted 4 things. Those 4 things were renegotiating royalties, people on productivity rates, top 20 vendors, and all those things that we've been working on have been successful. We're getting to where we need to get to reduce that AISC. So our all-in sustaining cost was dropped by another $30 an ounce. We're down to about $1,100 an ounce. Our target internally is get it to $1,000 an ounce US. Our guidance for the year was $1,050 to $1,200. It was a larger range. But the truth is, early in January, we were faced with some floods on the heels of the fires from Q4. So, we've had a challenging go here in Q1, and the team have still managed to consistently deliver. So it's nothing to balk about. I'm pretty proud of them, actually. It's a pretty exciting time for us and our shareholders.
Well, yeah, for sure. I mean, the thing that amazes me is that you're forecasting the same numbers that you did at the beginning of the year, despite the fires, despite the floods, despite COVID-19. How are you managing to do this?
Yeah, so look, we've been very proactive on the COVID front. One of the things that happened to us that was actually it was unplanned, but it was a blessing for us, was the fact that when Graham came on, we talked about earlier on, almost every interview I've had with you, Matt, I talked about how our turnover rate went from 87% to 16%. But one thing I wasn't saying in that interview was where our population or our people reside. We used to have about 80% of our people fly in, fly out to Beta Hunt. That's completely reversed now since Graham's taken over. We have 70% of our workforce that are local, 30% fly in, fly out. That turned out to be a tremendous, tremendous blessing for us throughout this COVID. The lowest we ever got to with our workforce at the worst, the lowest of a trough was 68%, which coincides perfectly with where our workforce is located. So when we were struggling to get people in and out of the plane, our workforce was still coming to work. We're now above 90% with both Beta Hunt and Higginsville. 90% of our workforce is at the mine site. So that's a huge change. By managing to get that workforce locally, we reduce costs, fly in, fly out, but we've managed to maintain our production. Coupled with that, Graham did an extremely good job at hiring a nurse right out of the gate. Look, it was way back in February. It was very, very early on. I think we were actually the first mining company to hire nurse doctors, to do some pre-screening, to bring them to the mine site, to put them at the airports. We've been very, very disciplined at making sure that our people coming into the mine site are properly quarantined so that we're not infecting any of the workforce. All these things that we've been doing have been very proactive and have helped us to maintain our guidance. Look, I was asking one of the bankers yesterday, Matt, what is the number for those that have maintained guidance? The number I got was anywhere from 40 to 50% of all mining companies have dropped guidance. We're very fortunate, being based in Western Australia, that none of the governments have come in and shut us down. We're being very proactive. We're being very disciplined in what we do. And as a result, you see the numbers in Q1. So one of the other things I just want to talk about is another step we're doing to be very proactive. Look, we can't say for certain where this is going. I don't think anybody can, to be quite honest. But we're taking the worst case scenario. We're saying, what if we get called and we're forced to shut down? If that happens, we have placed a stockpile in front of our mill. We built up a stockpile. We're mining from 3 sources today. We're mining from Fairplay, Beta Hunt, and Baloo. We've got about 100,000 tons of stockpile in front of the mill. If you're running 4,000 tons a day, that's about almost a month's worth of feed. So putting that in front of the mill is a very disciplined approach. In fact, I will tell you this, it's what saved us in Q4. When we bought Higginsville, Matt, I remember telling you this early on. When we bought Higginsville, we got the mine, the mill, but we also got a stockpile. When we had those fires in Q4, we ended up using that stockpile. We had 100,000 ton stockpile. We depleted it down to nothing. So come middle of January, we're faced with no more stockpile. We start building it up by adding Fairplay North into our mixture. Adding that into our mixture, and now we're putting in safeguards. We're taking away that risk. We're making sure that we have ore and feed in front of the mill in case we get a call where we're asked to shut down the operations or things like that. We believe that because there's only 6 to 10 people at the mill, there's going to be an opportunity to continue to run the mill. So we're making sure we're very proactive in case the roads get closed, in case materials or supplies stop coming in.
Okay, stockpiling, I get that. That's smart, and I do remember it from the previous conversation that you had done that, and it kind of saved the day, as it were. So you're getting back to building up that stockpile. I was really kind of getting at what has building up this cash, this free cash flow that you are accumulating. You are making money now. You're making a lot of money now, right? Nice, right? It's always nice. But it's giving you optionality, right? So you've talked previously about the ore sorter and bringing that in terms of improving productivity. What are the other things that it's allowing you to do now? And what are the things that, just in your head, that you're thinking, well, what's it going to allow us to do in the future? Because money brings options.
So look, let's just talk about the cash first, and I'll talk about the exploration side. In Q1, we managed to increase our cash position to $38.4 million Canadian. What was that? Probably around $4 to $5 million increase from Q4. And that, look, this is an important part here. That is despite paying into $5.3 million into hedges. These were legacy hedges that were put in place to reduce dilution when the mill was bought, Matt. So the hedges make sense why they were put in place for the debt. Now, we had 7,500 ounces of hedges in Q1, which cost us $5.3 million. You add that into what we actually added to our treasury, you're close to $9 to $10 million of free cash flow in Q1. That's an impressive quarter. Now, where do we go from here? Q2, we burn off those hedges. We believe wholeheartedly that people are investing in us. In fact, we're hearing it. People are telling us, look, Paul Huet, don't hedge, don't hedge. I believe gold is going somewhere else. And look, I've been in gold 30 years. I also believe gold is not capped yet. I think there's an unlimited amount to where gold can become here in the next year or so. So Q2, we will have no more hedges. We've got about 3,500 ounces left, Matt. 3,500 ounces. We had 7,500 we placed in Q1. It's easy math. It's 2,500 ounces per month. That's what we were doing. So once these 3,500 ounces are gone, our hedges are gone. We're selling at the open market. Now, what do we do about it? Well, let's face it. We are in a district that hasn't had much exploration in almost 2 decades. We've been talking about it. We've managed to reduce that Morgan Stanley royalty. We've always said, if we can do some work on these royalties, we're going to change these locations of mines. We are in an area 1,800 square kilometers. Within 4 months, we've identified 5 new areas at HGO within that 1,800 square kilometers. So extra cash will add drilling. We believe organic growth is certainly something that's doable for us. But certainly having extra cash opens up a lot of opportunities. And look, of the 5, I'll talk about Fairplay North, which has been very instrumental to us generating the stockpile. I'll talk about Aquarius. Aquarius is just south of the mill. The Trident mine was what the mill was built for. It produced 1 million ounces, Matt. We've got a resource directly south, 5 kilometers south of our mill. It's called Aquarius. This thing is wide open. We have intercepts of 600 gram, 200 gram across 2 meters. We've drilled some holes into that. So some of that money you're saying, well, what do you do with cash? There's no doubt that us putting money back into the ground, reinvesting into ourselves, paying off our debt will really create shareholder value.
Does Trident and Aquarius connect? Do you have enough data? What do you know?
Yeah, so we look, I would never go out on a limb to say that, but I would say that yesterday on our call, there's indication now that Mouse Hollow and
Hidden Secret?
Hidden Secret, sorry.
Yeah, I remember.
Yeah, there's so many of them. There's so many targets. Mouse Hollow and Hidden Secret are 2 satellite pits that are between Baloo and our mill. So they're closer to the mill. Their grades are similar to Baloo, 1.5 to 2 grams. Very high grade open pits. There's a potential that these open pits, actually these 2 satellite pits, could connect. We're looking at that. You ask where the dollars, that's a great place to spend dollars for our shareholders where we can unlock value. If these things connect, look, who knows what could happen in this district, right? Again, 5 areas, 4 months. We got the Fairplay North, we're mining it. Mouse Hollow, Hidden Secret, Aquarius, and then that zone to the north of the geophysics. It's a 5 kilometer structure that's been identified. So you can't help but be excited in this district and executing, hitting on all cylinders. And look, at the end of the day, producing cash, I couldn't be happier. And look, one more thing, Matt, I think that's really, really relevant here. People sometimes forget gold is $2,600 to $2,700 an ounce Australian. When you consider the metal price in US dollars, but you consider the FX, oh my God. Never in my lifetime have I seen gold like this. And in fact, it's been a record in Australia. So it hasn't happened in anybody's lifetime. So it's quite exciting to be mining in Australia at our location with these metal prices and knowing that there's no cap on gold. Who knows where it goes to from here?
No, I think a lot of people are quite excited about, where it could potentially go. Watch this space?
Yeah, exactly.
Okay. Well, look, I mean, great quarter under the conditions. As you say, not many people doing it. And we interview a lot of companies. I can count on one hand how many people are. So congrats on that, you and the team, obviously. Looking forward to seeing what you're going to be able to do with all of this cash. I think it's a very exciting year for you. And it's no secret, we do write about you, and we're very positive about what you've been able to do in a short space of time. I think this year's started off tough, but it'd be great to see what you can do by the end of it. So thanks for picking up the phone. Keep talking to us. If there's any new news, let me know. I'm sure it'll come thick and fast.
All right. You'll hopefully we'll be talking sooner rather than later. You take care, Matt.